Hello, I'm Alex Davies, founder of Wealth Club, and today I'm with Malcolm Ferguson of Octopus Ventures to talk about the Octopus Ventures EIS. Hello, Malcolm.
Hi.
First off, tell me about Octopus.
Sure. So Octopus Ventures, we've been around since 2007. We're best known for managing the largest VCT in the UK called Octopus Titan VCT. And we also happen to have one of the largest investment teams in Europe focused on technology.
And what about yourself?
Yeah, so I joined the team back in 2013. So I've been with the team for 7 years. I'm one of the partners in the team. Before Octopus, I worked in the investment banking industry, but initially in Bank of America Merrill Lynch, and then I moved to a technology boutique called GP Bullhound, which focused on helping entrepreneurs raise money from funds like Octopus, but also sell their companies later in the journey.
So you're launching a new EIS. Tell me about it. What does it aim to do for investors?
Indeed. So this is a product which enables investors to access the venture capital asset class, which historically has been reserved for ultra high net worths, professional investors and institutions, but via a more concentrated vehicle than a typical VCT.
And how does it differ from the Titan VCT, which you're, I suppose, best known for?
So if you were to invest in Titan, you'd be investing into an existing portfolio of 80 companies and then a group of companies that we'd invest then in. So you have shares in the VCT. The EIS product is investing alongside Titan into the next 10 or 15 companies. So in reality, you have a much more concentrated portfolio and you actually own the underlying companies rather than a fund.
And are they earlier stage?
They're typically the same stage as Titan would be investing. However, the portfolio is just much more concentrated.
Okay. So talk to me about the characteristics of the companies you're looking to invest in.
Yeah, so we invest the money through our pod structure. So we have 4 pods: Future of Money, Future of Health, Deep Tech and Consumer. Each of those are manned by 5 or 6 investment professionals who develop a thesis, knowledge networks, incumbent advisor relationships, so that we can hopefully see, pick and win the best opportunities in any space. So these pods generate deal flow and then invest in that deal flow. They invest via Titan VCT and via the EIS product. These companies are all UK-based tech-enabled companies founded by individuals who are pioneering and highly ambitious, operating in markets which are billion-pound markets. So we want them, when successful, to not be limited by the size of that market. And the final thing is technology. So they need to be technology or technology enabled, because that unlocks hyper growth, which isn't possible in traditional business models.
You mentioned the importance of the entrepreneur. What do you look for in an entrepreneur?
Yeah, so that's probably paramount. What we've seen looking at all the past investments we've made is the quality of the team, the quality of the CEO is the most important predictor of the success of a company. That said, it's very hard to know what makes a great entrepreneur, although we do have some structures and theses to evaluate people. We invest in people at the earliest stages of their career who have a unique insight on a problem, all the way to serial entrepreneurs that are 3rd or 4th, 5th business into their career. What they have in common is they're pioneering, they're very ambitious, and they're extremely hardworking, because you have to have some level of rationality to create a business, actually.
And so obviously you haven't made any investments yet. Tell me what type of companies you are looking for. Are there examples?
Yes, of course. So although we haven't invested through this EIS service yet, we are investing into the same deal flow that Titan VCT accesses. So this is the deal flow generated by our Future of Money, Future of Health, Deep Tech and Consumer pods. These businesses are at the seed and Series A stage traditionally. If you don't know what that labels mean, that's potentially as early as a deck and as late as early scale-up phase. So they are starting to generate some revenues and they're operating in really large market opportunities.
And will the EIS always be choosing the same investments as the VCT, or will there be some things which won't be in the VCT that the EIS will choose?
The intention as it stands is that EIS and Titan VCT will just co-invest on new investments together, and that is the intention, at least for the foreseeable future.
So why would an investor do one rather than the other?
Yeah, so they're very different products. Although they're investing into the same companies, the core of it, there's two main differences. One is the tax wrapper, and the other one is the portfolio composition. So if I ignore the tax wrapper for now, as that's something you can work with your financial advisor to optimize around. But the portfolio composition within Titan, you have 80 portfolio companies. Some of them are very mature, and so the volatility of outcomes is pretty predictable and quite low. Whereas in an EIS portfolio, you have 10 or 15 companies. Most of them will be earlier stages because you don't have a pre-existing late stage group, and therefore the probability of outcomes will be much, much broader. So you may get very high returns, which are unlikely in Titan, but you may also get losses, which is less likely in Titan as well.
When should investors expect their money back?
Investors that are considering EIS must be very patient. To build a successful business takes 10 years plus, and you're investors into the underlying company. So you only see liquidity when we realize that investment. So you will get liquidity through the sale of an asset, not through other means like is possible in a VCT, for example.
And why is Octopus launching this now?
So Octopus is launching this for a few reasons. We are seeing amazing deal flow, thanks largely to our pod structure. And therefore we believe that there's a great opportunity here for us to accelerate our deployment rate. We've been doing that systematically over the last couple of years. Adding our new pods enables us to scale our deployment rate, and our brand and our growing expertise in this sector means actually the time is now to start doing so. If we look at the ecosystem more broadly, in the UK last year there were 700 early stage investments that we could have done as of Octopus Ventures. Today we're only doing 10 or 15 to 20 investments, so we have the ability to grow that and still only be a small market share participant in that ecosystem.
And once you've chosen a company, how involved are you?
This is where you win or lose. It's a 10-year journey. The investment is very relatively easy part of the journey. Afterwards is where you have essentially a series of challenges until you get to a great exit, hopefully. So we take a board seat. Each of us are generally on between 5 and 10 each. That means we can act as a sounding board for the entrepreneur. We can help them navigate some of the problems we've seen. We have a governance role within the board. But then as Octopus, because we're a player of scale now, we've invested some of our resources into value add initiatives. So we have a portfolio talent team of 3 people that help with anything from installing a HR information system to finding a talent lead in-house to actually recruiting C-suite employees. And we have operating partners. So these are people who have spent 30 years in business and are great at their specific area. Maybe it's product strategy, maybe it's actually company strategy, maybe it's go-to-market. So we bring them in to help the companies potentially avoid some of the mistakes that they would have made otherwise.
And we're in the heart of a pandemic. Is now a good time to be investing?
So my view is probably yes, almost definitely yes, but it depends where you're looking. So what we have seen within the consequence of COVID has been an acceleration of digital adoption. And one of the examples that we point to is in the 10 years to 2018, we had a 10% increase in the proportion of sales that happened online. So it went from 5 to 15% of all sales in the UK happened online. In 2020, we had another 10%. So it was a 10-year acceleration in digital adoption that happened this year. That means things are changing. Furthermore, when there's periods of economic challenge, opportunities, pockets of opportunities which entrepreneurs can fill. And so at this point in time, if we look to the last economic challenge, which was in 2008-9, some of the best businesses were created out the back of that. Some of the Facebooks and so on, some of these really big successful businesses were created out of that period of challenge. And I think that's going to happen again in this one.
And do you want to talk about some of the successes you've had with Titan? Because clearly you have not had any successes in this EIS, but just give the viewers a flavour of what you might be able to do.
So I'll pull out a couple of examples. One, a company called Kazoo, which is something that we backed in 2018, founded by an individual called Alex Chesterman, who, if you've not heard his name, he was the founder of Zoopla, which was the first venture capital trust-backed unicorn, £1 billion company. We'd also worked with him at Lovefilm before. So this was the third time we worked with him. He's an outstanding entrepreneur who has actually broken the record of the fastest company to ever get to a £2 billion valuation. They raised over 240 million last month to help capitalise on the opportunity. He launched the business at the end of 2019 and it's already generating over 100 million in revenues. They're one of the only companies I've ever seen go from 1 million to 100 million in revenue within a year. It's a remarkable company. On the other, slightly different from the Future of Money pod, was a company called Bought by Many, which is a pet insurer that we first invested into in 2017. They launched their pet insurance product that year, and fast forward to today, they're now one of the leading players in the UK pet insurance market. And testament to that is in the deepest, darkest moments of the lockdown in May, they closed an 80 million funding round led by a New York-based fintech VC.
And what about exits you've had as Titan?
Yeah, so we've been really fortunate to have sold businesses to some of the biggest acquirers in the world. We've sold a business to Microsoft, two to Amazon, one to Google, one to Twitter. We've also sold businesses to Nestle and Unilever. In the last 12 months, we've sold 4 businesses that have generated material returns to our investors. The most recent one is a company called Calastone, where it was founded in 2007. It's a fintech business. We invested in the seed round in 2008. Fast forward 12 years, and we sold that holding to a private equity firm for 18 times the initial investment and 9 times the total investment. So that's testament to how it's probably a good example of how long it takes to build a business, and when you get it right, what good looks like.
And of these good companies, what do you think has been the common characteristic?
Yeah, so at its core, it's team and market opportunity and technology, creating a certain change in the rules of the game. Incumbents are incumbents for a reason. They are very profitable, they've dominated an area, but where their profit margin is the opportunity. And technology makes you much more efficient, so it enables you to behave in a different way. So if you're an entrepreneur that has a certain view of the world, thinks things should be done better and differently, usually it's driven by customer dissatisfaction. There's an opportunity for you to create something. And all of the examples of the ones that we've seen being truly successful is they've caused a shift which either drives much better efficiency or a much better customer experience.
And what about the companies that haven't done well or failed? What usually went wrong there?
Yeah, so we've invested into 120 businesses in total. 21% of those investments have lost money. If we look at our capital invested, it's about 13%. They go wrong for a variety of different reasons, and actually failure is an important part of our job. We're betting on sector change, pioneers changing the world. That should not be easy. You should probably fail more often than you succeed, but when you succeed, you need to win big. The reason they fail are for a variety of reasons. Either you cannot get to the milestones you need to secure more funding, the hypotheses you had didn't prove to be true, the competitive landscape changes. There's a lot of reasons why a company will fail. Fundamentally, it could even be that the team weren't able to upskill at the pace required to make the business successful.
For people who want to invest in an EIS this year, why should they choose the Octopus Ventures EIS?
Octopus Ventures have been around since 2007. We've made over 120 investments to date. We have one of the largest investment teams in Europe focused on technology, and this generates some really good deal flow. That deal flow has historically been accessed by retail investors through Titan VCT, but for those that want a more concentrated portfolio with a higher return outcome potential, so potentially higher upside but potentially higher downside too, they can access that through the EIS, Octopus Ventures EIS.
Malcolm Ferguson of Octopus Ventures, thank you very much.
Thank you.